numbers. It's the fastest growing tech mega cap that we cover. It's the most profitable, and it's the cheapest, traded in less than one-time peg. So we think it really offers a very attractive risk-reward here.
What about the Chinese government potentially taking a stake in that company? Doesn't that represent...
Welcome back to the Capital Mindset Show, guys. We're your hosts, Austin and Fabio, and today we have something incredibly important to share with you all. And basically, this kind of really goes back to why we started this channel, and especially actually our first video, funny enough. And yes, if you've guessed it, it's another video on China. So today, Fabio actually has been noticing that there's been a certain level of misunderstanding as to what we're kind of saying here at Capital Mindset. So in essence, what we're doing now is we're actually diving deep into court cases to actually show that there is precedence. There's precedence for what we're saying. There's precedence in Chinese law for what we're saying might happen with these particular entities. So Fabio, how about you take it away right now?
All right, so basically to clear up any kind of misunderstanding that there might be about the structure of the VIEs, just note that what you're buying is a Cayman Islands company. And in fact, I believe that we should actually pull up the VIE structure and make sure that we have that in front for our audience, front and center, before we continue, because I want them to follow along as I discuss this. So I'll just pull it up right now. So here, what we are looking at basically is you are the foreign investors, you own the SPV1, the SPV1 has a contract with the SPV2, and then has a contract with the WFOE, then has another contractual arrangement. This contractual arrangement is with the PRC individual. We'll get back to this a little more later. Or it can have contracts with the domestic company. However, that is the more likely, okay? So just when we're talking about the VIE, just know this is what we're talking about. There's some people who say, well, there's a company that owns that company that then owns the real company. No. There's no connection between the actual domestic company and the WFOE. But kind of beginning, let's kind of talk about why VIEs even exist. So give some backdrop. So VIEs were originally designed, and actually, Austin, let's not bury the lead here. What is a very famous scandal? What company, right, that did a very famous scandal, utilized tons of VIEs? What's the name of that company for everyone?
It's the same company that if you ever take any accounting class at your community college or actually an accounting major, it's Enron, and you'll never hear the end of this company. Tons of legislations really come out about it after the entire Enron scandal, et cetera. So yes, what Fabio just said is true. In this case, Enron utilized a ton of VIEs. So continue, Fabio, please.
And we'll talk later about what FASB did after that. But specifically, FASB did some changes pertaining only, yes?
Let me actually cut in and say here, for those of you who might not know, what FASB is FASB stands for the Financial Accounting Standards Board, and these are the guys who actually write the US GAAP, that all US companies have to follow US GAAP. So sometimes if you see other videos on GAAP income, GAAP, et cetera, so forth, that is written by FASB. So continue, Fabio.
Yeah, so basically the VIE was designed for a way to allow Chinese companies to raise capital in the West, because Westerners are not allowed to own shares in Chinese companies, especially in what is considered restricted companies. But in typical Chinese VIE structure, allows foreign investors to invest in entities without directly owning the entities. So this typically uses a loan that foreign investors are not allowed to own equity stakes in the VIE. So that actually complicates it further. I didn't want to delve deeper into this in previous videos because I didn't want to overwhelm the audience, but there are specific ways as to how the capital is then returned. I want to note that a lot of, I think some YouTubers or other content creators out there, they see, for example, Alibaba, and they say, well, Alibaba has all this cash, right? It's generating all this cash. And then they still see the share count going up because they're issuing new shares. They're issuing new shares. Well, and then they seem perplexed by it, almost as if they're like, well, why are they doing that? But then they ignore it, and then it kind of goes right past their heads, and they go back to like, oh, the fundamentals, treating it as if it was a regular company, right? And it's not at all. The reason why is that they are issuing shares without giving up ownership. Now, I would actually reference back to the rocket videos we just made, going over how complicated that structure was. Well, the Chinese VIEs are like that on steroids. Okay.
So Fabio, let me just cut in here for a quick second. So what you're trying to say for the audience who might not be keeping up with this right now is, in essence, there's been some YouTubers that have wondered, okay, if they're so cash heavy, if there's a lot of cash on their sheet, why are they then still issuing shares?
Yeah.
And what you're saying, if I'm making sense of this, and kind of if the audience can kind of follow along with this, what you're saying is that they're issuing more shares, raising more capital, yet are not giving an ownership stake in the business itself. Is that what you're saying here, Fabio?
Oh, exactly. That's exactly what I'm saying. So with Rocket Mortgage, there was 2 shares of stocks and a separate arrangement for the profits. In this case, you get nothing. You're not even given ownership of the shares, right? And it's great because for the Chinese investors, it's basically free capital with no dilution. They should issue as many as they can. However, they got to keep the game going for as long as possible. So they got to coax you in, coddle you, make you feel okay, make you feel assured that nothing bad will happen to you. So they're going to do that for as long as possible. But I assure you that there will be a net negative capital outflow out of these entities. In essence, they're going to take more capital from you than they're going to return to you. And at the end of the day, Austin, how do you value an investment? How do you value anything? So for example, if I came to you with an opportunity, a business opportunity, I said, Austin, please give me $10,000. You're probably going to ask me, well, how much returns are you going to provide for me? What's my cash flow going to look like? That'd be a reasonable question. What if I told you it's uncertain? You're just going to have to trust me. In the future, someday, one day, I might give you some. Would you trust me?
First of all, that's kind of an interesting question that you're really posing here, because that's also the fact too that, like, I would in essence just frankly have to trust you. But here in the United States, I would have an ability whereby if you betrayed that trust, for instance, I could take you to court and do multiple other things through court to make sure that my ownership is really my ownership claim is actually being honored. Is that kind of the case when we kind of look at Chinese law here? Like, is there potentially a precedence where this has happened before in the past and the Chinese government has really honored the ownership claim, that these foreign investors have had in these various Chinese entities, Fabio?
Yes, there are actually a couple of court cases in which the Chinese Supreme Court has ruled that you own nothing. Okay, that's
wait, hold on. So you're saying, just to make sure that I'm understanding this, there have been actual Chinese Supreme Court cases that have ruled that you own nothing.
Yes, yeah, for specific businesses, yes, it's already there because let me actually find my citation on an individual, a quite famous individual in terms of a subject matter expert in Chinese law.
Fabio, then what recourse will I have then?
Nothing. I can tell you that right now before I even find this. Nothing.
Audience, if you guys can really see my visible shock, it's genuine. This is completely. I didn't even know this. This is wow.
Yeah, there's nothing. So I'll quote Steve Dickinson. He's partner at Harrison Moore, co-author of the China Law blog. Very deep read if you want to learn about Chinese law. Okay, he's a subject matter expert in Chinese law. I'll quote him here. To the extent a VIE contract is designed to circumvent the requirements of Chinese law, such contracts are void, not voidable, void, period. It is as if they did not exist. That was what he had to say regarding the VIE structures. And I will start citing some court cases probably later in the video to get into specifics, but to summarize, yes, there's been several court cases in both Shanghai and the China Supreme Court that said, nope, yeah, you own nothing. There's
precedence. There's precedence here.
However,
I'm hearing you correctly. There's precedence here.
Yes, there's precedence here. However, I will add, and this is what everyone, when I've been saying it in the past videos, of course, I did not dive deep enough because I didn't want to confuse our audience too much. But I believe it's really important that we start getting this content out there so people truly understand these are very dangerous instruments. I don't even know how deep this goes and what the implications are here. This is probably the event of our lifetimes. We're pretty young, Austin. This is probably the financial crisis of a lifetime in waiting right here. You're listening. Remember the CDOs of 2008? Well, this is the new CDOs because there are hundreds of billions of dollars invested in these entities. And remind you, the CDOs was, I think, even more than that. And they went kaput. They went to zero. So I can only imagine what's going to happen here. It might not be as bad, but in essence, we're giving capital in exchange for nothing. And that's basically a free capital raise for these businesses. But I'll have here, there's a quote I have here from 2017, right? Alternatively, government officials could use the implicit threat of potential invalidation to pressure the firm to undertake actions that would advance government policies or benefit government officials. And this is where I'm going to highlight this next part, to the detriment of shareholders, such as increasing hiring, and this is the highlight, donating to specific charities. Why am I highlighting that?
Didn't Alibaba just do that with Tencent?
All of them did. That's why I'm highlighting that. This was written years ago.
Are you
okay? So, furthermore, Chinese courts are unlikely to enforce contracts designed to circumvent the spirit of the law. Now, I will be very clear because there's a big confusion out there. I do not think the Chinese government will say VIEs are not valid. They don't want to do that because they're getting free money.
Yeah, they're literally raising capital and not having to give any ownership out.
Okay, this next section is very important, okay, because if you understand that, it's just not clicking for a lot of people. But if you understand this next part, it's capital controls, okay? By the way, I'm not even touching the taxes. The taxes are extremely ambiguous. So I'm going to go back to quickly the entities here because it's important our audience can keep track of this. And if anyone's confused, leave your comments down below and I'll try to get back to you. Try to explain this as best I can. I'm doing this out of passion. I really want everyone to just know this. I'm actually trying to just inform everyone, okay? Just inform, that's it. We're not getting paid to do this. This is a passion project, if anything. So the WFOE right here, this entity, right? Well, this individual, the domestic company pays its taxes or whatever, right? And normally in the United States, you get a dividend, right? You get double tax. So the company pays taxes and then you pay taxes on the dividend level on the individual basis. So here the same thing will occur, you know, this pays taxes and then let me actually let me annotate some here so everyone can see. The domestic company pays taxes and then the dividends are paid. And then the dividend here, how it's supposed to work is that dividends are then paid to the WFOE. Okay. Now, then the WFOE is a separate entity. Guess what they do, Austin? They pay taxes.
Yeah, and then so travels up the chain worth of taxes as well. I would assume, right?
Yep. So they pay taxes, and so there's an ambiguity of how that's going to be treated. It's not really known. So really, what they do is most of them don't even return capital to shareholders because it's not. There's not even a purpose. Again, most of them. I have yet to see a net positive return capital to shareholders. That is actually really important to understand. An entire country, and I can't find one. I can't find one.
Just to cut in here for a quick second too, for those of you who might not know, WFOE stands for Wholly Foreign Owned Entity. Mm-hmm. Anyways, continue, Fabio.
That's the thing that you kind of own, but like
yeah,
you can't own this thing, which is what you really want to own. You want to own the domestic company. You want to own Alibaba, but you can't. You can't own anything, right? You can only own as far as you know is this thing right here, because that owns nothing. That's just a holding thing. That's contracts with the PRC individuals. But anyway, what we don't know is the implication of the taxes. That's a side note. The capital controls are really important to understand. So we've discussed this a little bit in other videos, but the capital controls essentially, if you look at the Chinese law, the specifics of Chinese law, they have restrictions on how much money can leave the country, and we call that capital controls. There's ones for individuals and there's ones for businesses. Now, capital controls apply to even the disbursements of returns of capital to shareholders. So you over here, there's not even a chance you might even get anything, right? And that's the whole point of owning a business. The whole point of owning a business is that it will return capital to you in one way or another sometime in the future. So let's say Google. Google in 2015 was diluting you, and it wasn't buying back shares. It wasn't paying dividends. Why would you own it? Because of the future potential that it would. Now, Google today is buying back tons of shares, right? So the 2015 you, if you looked at Google, the idea of investing is you're buying Google and saying, okay, in the future, they're going to give me returns. Right? They're going to give me returns on capital. They're going to either pay me a dividend, they're going to buy back shares, they're going to do some form, right? But let's pretend that you somehow know Google will never give you anything. What do you own? You just own a piece of paper. If they never do buybacks and they never do a dividend, and I can guarantee you that, then the only way you're going to necessarily profit is by the greater fool theory. Greater fool theory simply states that you must find someone to pay you a higher price than what you paid for it under no basis of valuation, because the whole purpose of discounting cash flows into the future is that those cash flows are yours to begin with to then be returned to you. That's the only reason why they have any value. So if you want to make this simpler, as a simpler example, whoever's watching, okay, let's say you want to come into business with me, right? I'm going to offer you $100,000 investment into my business, okay? And I can tell you for a certainty, I will never give you a dime back ever. I'll never do it. Will you give me the 100,000? Well, your answer, if it's yes, I'm going to laugh, but it should be no.
Yeah.
It should be no, right? You should never give me your $100,000 because I'm never going to return anything to you, right? That would essentially be gifting me $100,000. Okay. Now we can play another game. So this is, let's say you give me $100,000 and I give you $5,000 for 5 years, then I stop. Right. So then that's an example of still, I returned something to you, but it's a net negative, right? It's a net negative. I still kept, right? 5,000 times 5, right? I still kept most of the money, still kept the 75,000. So in essence, all the Chinese companies, I have yet to find one that is a net positive because there's no reason for them to. They don't owe you nothing. So I'll actually go to the court cases. Let me actually find the court cases. Oh, and actually, let me cover this next part first before I get to the court cases. That Fan and Wong, a study of Fan and Wong, it was research done in 2005, found that employing the big N auditors can mitigate agency conflicts. Right? That was okay. So that's a separate conclusion. And what happens is actually, if you see from Gillen and Stark 2003, VIEs were 11% more likely to employ large auditors. Okay, what does that mean? So they're using a statistic saying that if you employ large firms, you're less likely to commit fraud or whatever, or have agency problems. And so they use large auditors as a mask, right? That's what's going on here. This is, and by the way, where I'm going with this further is I implore everyone who wants to know more about that, go look up about the issues between these big four accounting firms and the Chinese counterparts. They're not counterparts, but the offices of, for example, Deloitte and Touche, PwC, all of those in China, they're not actually the big four. Okay, and those are the ones auditing them. Okay, so there's all these tricks that they employ that people don't really look at the nuances. And again, I'm not even assuming the numbers are false. I'm assuming that all the numbers are correct. I'm assuming Alibaba, all the numbers are correct. Everything's fine. The point I'm trying to make here is that since you do not own anything and you are owed nothing, right? And why are you owed nothing? Because of legal precedent, right? Mm-hmm. There's no point in investing in the firm at all. There's no reason. Why would you buy something? Okay, I'm going to cite the court cases that you've been looking for now, Austin, right here. So we have 2012, the China Trim case, right? And I think I have that pulled open here. So let me actually clear this and then exit out the annotations and pull out the Chinaman case. So essentially, this is where the Supreme Court validated ownership claims of outside investors and ruled that contracts were unenforceable. because the VIE-like structure amounted to concealing illegal intentions with lawful form. Okay, let me repeat that for you in a different way. The China Supreme Court, when a foreign investor said, "Hey, I'm an owner, right? I'm owed stuff, right? I have shares." The China Supreme Court said, "No, you don't." So this game is going to go on as long as they can, but when they no longer need you, that's when the game is over. The party's going to be over. Here's another one. In the Giga Media case, right, we have a Shanghai arbitrator reached a similar conclusion in 2014. I think I might have that one up here too. This one, this very long thing. I'll let everyone read it for themselves. But goes into greater detail about these complexities. And I will cite Gillis and Lowry, 2014. So in these cases, investors, these foreign investors, were left with nothing to show for because they didn't own anything. They just had a contract. And by the way, I cited this in one other video, in one of the previous videos about these China technicalities, that contract law is inherently weaker than property law. And on top of that, you're trying to enforce contract law in a jurisdiction that is not going to favor you, right? So contract law is known to be weaker in the United States, right? And you are far more likely to get contract law enforced in the United States than you are in China, right? So whether or not you're in Hong Kong is a maybe a different story. But I'm going to cite another thing that I want everyone to remember this. This is actually another precedent action by Jack Ma. So I will remind everyone what happened with Yahoo. Yahoo owned 43% of Alibaba Group.
Owned.
Yeah, keep those quotations.
They owned it. Yeah.
Owned it. And in that video, I cited in the video the Reuters article where the author was surprised how little control Yahoo had over Alibaba. Now, the author wouldn't have been surprised if the author did research, if the author understood the implications of the VIE structure, because it makes sense when you go under the context that Yahoo owned nothing, right? You don't control anything if you don't own anything, right? Am I right, Austin?
Yeah.
Now, remember, it is in Alibaba's and China's best interest that the facade continue as long as possible. Because what do they get in return, Austin?
Free money.
Free money. So
literally, yeah.
If you want free money, then you're going to smile and make the guy feel really good who's giving you the money, coddle them, make them feel good inside, bring them in closer. So right here, I want to remind everyone that Ant Financial was essentially taken from Alibaba by Jack Ma back in those days, right? And Yahoo and SoftBank sued. They sued because it's the equivalent of Jeff Bezos saying, "Oh yeah, this AWS thing, this makes a lot of money. Yeah, it's mine now. It's not yours." Okay, imagine if Amazon did that. Would they get away with it, Austin?
No.
But if it's a Chinese company, do they get away with it?
Yes.
What do you think?
Precedence.
Yeah. What do you think would happen if Amazon did that to AWS? What would happen to Amazon stock in the longer term?
It would just basically dissipate.
Yep. But
Any
remember,
and all investor trust towards that company at that point would just be gone, literally gone after.
But remember, China has a ton of growth, Austin.
I'm speechless, Fabio. I'm literally speechless. I'm literally speechless. The fact there's precedence for this is, I'm literally speechless. I don't know what to say. You know?
Well, I think we covered forced donations. That was more or less predicted in the past, and we're seeing it now because it's always the hanging threat of just eliminating the VI. They're not going to do it. I want to be very clear. There's for seemingly people think there's two camps. I'm in my own camp. Okay, there's two camps that people think people are in. People either think the VIE is not a problem, and I'll cite the argument because I understand the argument. The VIE is not a problem because they would never shoot themselves in the foot. They would never just, I'm agreeing with you there. I agree with that. All right. And then there's the other side saying there's a fear that China's going to delist. They're going to they delist all these companies because it's illegal, blah, blah, blah. I disagree with them. I only agree with them that there's a huge risk, but they're missing the risk. And so are these people. They're both missing the risk, both camps. What the real risk is, you own nothing in the first place. You're not going to get a return on your investment. You're not. The only way you will is if someone pays you more for it. Because mechanically, how do stocks go up, Austin? Mechanically.
More people buying.
Right. And then over the long term, it should reflect the fundamentals. But mechanically speaking, in the short term, if everyone starts trying to buy a stock and no one's trying to sell it, the stock will go up until a supply meets demand. And then the reverse happens too on the downside. So that's not what I'm saying. I don't even know what Alibaba will do in the short term to long term in the price, as long as no one cares about the not owning anything part. So as long as like this sell off right now is probably, and this is probably the most important part of the video for the longer term. This sell off, as long as the investor base does not realize these things that I'm pointing out, as long as they don't realize that,
Man's even got the papers.
Yeah.
When you know he's serious about this.
As long as they don't realize that, then this is just temporary nonsense, right? The real sell-off will happen when everyone realizes like what they're buying, right? What do they own? They own nothing, right? Again, I'll reiterate. There is legal precedent under the China Supreme Court and the courts in Shanghai that when foreign investors said, hey, I am not being given my rights as this owner of a company. And then the Shanghai courts and the Supreme Court of China said, well, you're not an owner, so I'm sorry, but thank you for your money, and you get nothing, right? Wow. So I think I've tried to make myself clear. It's taken about 3 videos so far, and it still might not be clear to some people, because some people, it just doesn't click yet that they don't own anything. And they still think that what I'm arguing is that China will delist them, when I try to say over and over and over again. If you see someone saying that I'm saying that, please correct them, okay? I am not saying that they will delist them. I'm saying they're going to continue the game forever. It's going to come from the investor base when they realize that they don't own anything, right? When they realize that they're not going to get returns on capital. The business, there's no incentive to. First of all, we don't even know the tax implications. The tax implications are completely ambiguous, sorry. And we don't know if at any point that's the one thing I actually almost forgot to explain. The contract is done with a person.
Wait a second.
Yeah.
The contract, the
Yes.
WFOE,
Yeah.
that contract, Fabio, that's done with a person.
Typically, yes.
Is it done with the company, or is it just done with the I'm not discounting anything at this point after everything I've heard right now.
It can be done with the company, and you can find instances what it is, but no, most of the time it's done with a person. It's done with an individual, a Chinese individual who owns shares in the company that you want to own. Wait. Yeah,
Okay,
digest that. Break that down.
When you're investing into this, you're effectively entering into a contract with an individual who owns shares that says, I'm going to give you X amount of money. There is precedence that you don't actually own anything. I can pretty much indiscriminately take this away when I feel like it. And there's precedence for that too. Wow.
Yeah. Oh, to break it down into a simpler example. I own shares of Amazon. I'm in a completely different country. Amazon is, let's say it's not the American Amazon. It's the Amazon of, I don't know, Russia. It's the Amazon of Russia. And this is a crazy good investment. Awesome company. It's going to grow like crazy. I own shares of it. You're the VIE respective holder. I'm the individual who's going to participate in this VIE structure with you. I'm going to make these contracts with you, and you're going to give me basically capital. And the capital is going to go to the business, but I actually own the business. let's say you're right, and you're the investor and you're like, oh, I believe this company is going to go up a lot in the future because the business is going to do great. All right. Let's say you're right. And the company goes up a ton. It's worth $1 trillion in the future. Okay. Wow. Those shares I promised you, they're looking kind of juicy. I might not give it to you. I'm going to keep the profits. What are you going to do?
But it's like throughout this entire example, and obviously you're referencing Russia, but in this case, we're talking about China.
Yeah, because
there's
a lot
precedents
of people,
in the court system.
Mhm.
Court system. There's precedents in the court system that allows them to do these sorts of things, Fabio.
Yeah, essentially. Like, so it's not a problem that comes up until they do something to mess with you. So again, I'll cite Alibaba against SoftBank and Yahoo. It wasn't a problem until then. And then once that happened, they didn't really get that mediated. They just got some money, but the money was like chump change versus what they really lost. And then people just forgot about it. Now people are like, oh, Alibaba, great buy, because, whatever. All of these are the same thing when they're clearly not. But yeah, that's basically it. And I'm using Russia as an example. I've invested in Russia. Russia is actually a much safer place to invest than in China, which is hilarious because people don't think that. People think actually China's safer than Russia, but there's misunderstanding. That's why often Russian equities are priced kind of interestingly, depending on the moment. Anyway, so yeah, that's pretty much what could happen. Like I say, oh yeah, you were right in the business 10x in profits over those years, and now they are going to be paying, I don't know, dividends, and I just say I don't want to give it to you anymore. Then what you're going to presumably do is try to sue me, but then you're going to sue me in my country where the courts favor me, and
where there's precedents,
where there's precedents that you're going to lose, first of all, and then there's no way you're really going to be able to enforce it. On top of that, there's an ambiguity of how you're going to sue me, because, like, for example, we go back to the and I say ambiguity because it's like, the reason why I'm saying that it's not really known. It's not really known how you're going to be able to sue me through all these entities in the way. It is difficult. It's usually people with a lot of resources. So if you don't have any resources, you're really not going to get anywhere. And on top of that, even if you do get anywhere, the court system is completely stacked against you over there. So in this example, in me as the Russian investor, and let's pretend Russia is completely unfair and says, there might be people who say that, but let's pretend in this case, they're 100% going to side with me. You get nothing and I end up with everything. I keep all the money for myself because I'm the actual owner. You're not. You're just, some guy who owns a VIE somewhere in the Cayman Islands. Of course, you might be the innocent retail investor and you didn't know all this. And even when you did know all this, we've been taking 3 videos to explain this. It sometimes can just pass right over your head, all this stuff, because it's really complicated. Chinese law is extremely complicated. It's one of the most complicated. Like, I reckon everyone should go. Well, I don't know everyone, but I think if you're going to invest in China, you should at least familiarize yourself with Chinese law. And actually, I'll actually shamelessly plug the China blog, the China law blog, and really familiarize yourself with Chinese law. And if you don't, I don't think you have any business investing in Chinese equities. So for example, you have to come to terms. I think this is where you can invest in China. You come to terms, right, that you own nothing and you are more likely to lose everything, under the understanding that the only way you come out of this okay, long term, is if eventually the VIE system is changed and you are then fully recognized as a shareholder. You will make a tremendous amount of money if that were to happen. That is a long shot, right? If that happened, you'll have everyone. Like, for example, if you have an overhaul of the system where then they open up more and then they, for some reason, because this could still not happen, everything I said so far could happen, like they overhaul the system, they open up more, but let's say they don't honor the VIEs. Right? They don't honor the VIEs and they kind of say, okay, well, we'll now allow you to own shares, but the VIEs, that's its own thing. Let's assume they do. Then buying the VIEs now will be incredible. One of the greatest investments of your entire life, potentially. Because again, if they were shares, oh yeah, they're buy, but they're not. And actually there's an implicit discount in VIEs between 30 to 35% discount.
Wait, how did you arrive at that, Fabio? Just like
So-
just to like walk the audience through your method of thinking between this discount that you just cited.
Yeah, so if you've been in this game for a long time, you've always noticed that Alibaba, for example, just to keep it simple with the same stock that we've been talking about, Alibaba has been trading a discount on a earnings to earnings with compared to something like Amazon, right? In almost every metric. So they've always traded at some form of a discount. The discount's usually been pretty steep, around 30% relative to Amazon. Amazon's always had like a high multiple, but the difference is like you actually own Amazon, but in Alibaba you don't. So like the market itself, like Howard Marks says, the market is telling you. Like I'm not an efficient market theorist, right? But I understand some of the theory behind efficient market theory, and some of it's kind of correct, where the market does price in known risks. Sometimes it prices them in incorrectly. We're not saying it's correct pricing, but it prices in saying, hey, there might be something here. You're not, to put it bluntly, you're not a genius for finding out that Alibaba is cheap on their financials. You're not a genius. That doesn't make you a genius. Okay. There's a lot more to the monster than meets the eye. All right. There's a lot more. And I think if you recognize that, and actually, we're not profiting from any of this. We're not going to take a short position in this creature. I'll just call it a creature at this point. There's no real way I see right now to profit from this dilemma, because I don't know how long the game will continue. And I'm not going to be like the Michael Burry and being stuck in something for 5 years, because for me, I can't handle that stress. That guy has a stress level that I just don't have. Right. And that's why he is where he is today. And I'm not there yet. Okay. So let's just be clear on that. So he did that with the housing crisis, and he was wrong for many years before he was right. Okay. So I'm not going to do or stress myself with that. Plus, I am against a government that wants to extract as much capital from the West as possible. So I don't want to play against a much more powerful entity than I am. But I think I've covered everything, and I've tried to make it as simple as possible. Again, this is our third video on this
I think
topic.
you've covered everything too, Fabio. I think you have covered at this point literally everything.
Well, you think so, but not really. I only summarized.
Oh, there's more.
I've only summarized the important parts,
Yeah.
because this is not like a law class or anything like that. We're not talking to we're not talking to lawyers. We're just talking to our awesome audience, and we're trying to help them just bring out this information in some way that's easy to digest, because not everyone has the time to read all this stuff. This isn't, I mean, if you think US law is complicated, I'm not even kidding. Chinese law is really complicated because it is ambiguous on how is it enforceable. So it can say something, but depending on, what the regime says at the time, it can be just completely different on how it's enforced. So, so again, like the VIEs are not a problem until you go and try to remedy a problem that they've caused upon you, in which case at that point you're going to run into some roadblocks. But yep, that's pretty much it for the VIE structure. If anyone has any questions, I'll do my best to respond to them. You can get complicated if you want. I'll try to respond in as short as possible if they get too complicated, but don't make them too complicated where I have to write like an essay to respond. Because I don't have
that case, Fabio,
time.
we can honestly just make another video at this point,
Yeah, if it's too long and it's something specific that I didn't really cover too well, or you think I didn't cover too well, like we can make another video. And because again, I think it's important that those who know try to make the information public and available, freely available. There's no paywall. I'm still working on the second article, trying to make it as information dense as possible, but as much value as possible. I'm trying to not make it too long, so I'm trying to take stuff out, but that should be up at any point. It's probably within a week I'll have it done. And then you guys can read that for free, no paywall, nothing, just passion project, just some love from two guys on the internet.
So Fabio, kind of to like kind of take a sidestep from here. So
Hmm.
we've been getting a lot of people telling us, where's the bullish content? You guys are incredibly bearish on basically everything. You guys are really sad to watch, like you guys are pessimistic about everything. You're pessimistic about the market. You're pessimistic about these potential growth stocks that could 10x, which keep that in mind. Bear with caution. But basically, so what we're kind of telling the audience now is actually, funny enough, we are actually bullish on some stocks. And that will be coming out relatively soon. The stocks that me and Fabio both are bullish on. So I don't want to hear from my mutual friends anymore, our mutual friends anymore, that all of our content is negative.
Yeah.
So well, you've heard it here, folks. If you've liked what you've seen here today, if you like the extensive amount of research Fabio has been putting into this, he's got that whole stack of papers there that he's got to prove it. And if you've liked anything that you've really seen here today, please be sure to like, comment, and subscribe. That really helps out the channel. Sharing the video really helps out the channel too. Shout out to some of our commenters who have shared some of our other videos. And then also too, please feel free to visit our website, capitalmindset.org, where we post free content, free informational content, and everything. So thank you guys so much. We're your hosts, Austin and Fabio, and we look forward to seeing you guys again. Take care.